Today's real estate talk is all about VA loans with special guest Harry Azzano, and we're getting started right now. Thanks for joining us today. We have a special guest, Harry Azzano, who is the producing branch manager with Union Home Mortgage. Harry has been in the mortgage business for over 21 years, and he has helped many of my clients in the past. He is a wealth of knowledge, and I'm excited to have him here today. And today we're focusing on one of Harry's specialties, which is VA loans. So welcome, Harry, to our video today, talking all about VA loans.
Christine, thanks. Thanks for having me. And hello, Ohio. How's everybody doing out there? And
Good.
Awesome topic. I'm so glad to be a part of this with you.
Well, thank you for agreeing to do this with me. I really appreciate it. I think it's a lot of times we have a lot of questions on VA loans, and I thought it would be a great topic. I see a lot of times some of my clients are not sure if they're eligible for a VA loan, if they can, if they can actually, use their benefits for it and how it looks for them, the loan process, and sometimes then on the seller's end, what that would look like for them. So I thought it could be a great topic of conversation. So thanks for joining me.
Oh, looking very excited about it. This is awesome. Right. This is probably one of my favorite loans. So
Great. All right. So let's dive in. Awesome. So let's start with, what is a VA loan?
Yeah. So great question to start. A VA loan is basically a residential mortgage loan for U.S. veterans. So the branch services, Army, Marines, Navy, Air Force, National Guard, Coast Guard. So it's an awesome loan for those veterans or for active duty members.
Great. And what requirements would somebody need to utilize their VA loan, and who can apply for a VA loan?
Yeah, great question. So first off, when we talked, when we have a conversation with a veteran, one of the first things we're asking them if they have an honorable discharge. Because if they have a DD 214, which is that discharge paperwork, and we want to do is try to see if they get their certificate of eligibility, which is called a COE. So we're going to get their information, get that DD 214. We're going to reach out to the VA, or our team will reach out to the VA and get that certificate of eligibility to give a good idea of what they're going to qualify for, or to make sure that they're eligible for that VA loan. So that's kind of the start of it. They can do that themselves, but we have some direct contacts there where we can get it a lot quicker.
Okay. And who can apply for that loan? Is it just the veteran?
So it starts with it could be the active military. So if someone's active, could be a veteran that has an honorable discharge, or it could be a surviving spouse. So there's some requirements with that too. Some rules and guidelines for that as well if they're a surviving spouse.
And what do you think are some of the benefits of a VA loan?
Number one, I think is the no down payment. Where if you look at some other types of financing, conventional, FHA, there's going to be anywhere from 3 to 3.5% minimum down payment. Where the VA does not have that, or does not require a down payment. So that's number one. Number two, there's no monthly mortgage insurance or PMI. So where, if you don't have 20% down, a lot of cases you're going to have that mortgage insurance in your payment, where the VA loan does not have that. So huge benefit.
That's huge, because how much can that run somebody typically?
It could be $100, $200, $300, depending on what that loan size is. But it's going to save them definitely in a monthly pocket, or their pocket.
Oh, absolutely.
So, yeah. The other thing is flipping rules. So you're seeing a lot of those too. So flipping rule basically means, if let's say an investor buys a home, rehabs it or renovates that home, gets in living condition. A lot of times there's going to be a 90-day or 6-month rule, depending on the product, where the VA does not have that rule. So someone can buy that home right away, which is nice.
Oh, that's awesome. Mm-hmm. What type of properties can somebody purchase with a VA loan?
Yeah, so it has to be an owner-occupied property when they're purchasing. So they're going to live in the property as a primary. and then they can purchase up to 1 to 4 units. So as long as they, let's say they're going to buy a double or a multi-unit, as long as they're going to occupy one of those units, then it's considered an owner occupied. So 1 to 4 units and owner occupied.
Okay. And then how do condos play into VA loans?
Condos are a little tricky. So most condos, we have to get them approved. So there are very few condos out there that are VA approved. So that's the first thing. If someone says, "Hey Harry, I want to buy this. We're looking to write an offer on this condo." First thing I'm asking is the address and getting that information, because we want to make sure that condo is approved before they start writing their offers. So very important. And if they're not approved, then we can look into options to see if we can either go to convert it to a conventional loan, or we contact the HOA and see if that's a possibility to get it VA approved.
Okay, so let's talk about what that means, the VA approval on a condo. Who does that? Who's responsible for that? What does that look like?
So, well, we actually have a condo team on with UHM that helps us with that. But the first thing we're going to do is we're going to look up that address and condo association, see if it is VA approved online. If it's not, then our team is going to see what it's going to take to get that condo approved for the VA.
Okay, so and then approving that condo comes from the association, correct?
Starts with the association. There's a lot of paperwork that they have to complete, but then we make that connection and get that application into the VA.
Okay, and then I know on my end of it, often we have to, even though a condo might be approved, say in November, they might not have renewed it in January. So we're always having to check to make sure that association has renewed their approval.
Correct. And a lot of times when you see those that are expired, maybe it's just the updated paperwork, updated insurance, master policies, et cetera, that have to be just resubmitted.
Right. So, and sometimes I see a lot of times associations are not approved because of like too many renters in an association, or some things like that a lot of times people don't really think about.
Right. So there's actually we call it a condo questionnaire that is completed by the HOA, that exactly what you just said, has all that information, on the occupancy, renters, primary, all that comes into play when we're going to try to get them approved.
Okay. Mm-hmm. And when you have already purchased, say you purchased your primary home with a VA loan, can you then purchase another home with a VA loan, or are you no longer allowed to use your benefits?
Again, you can do that. It depends on your entitlement. So it goes back to that certificate of eligibility that we talked about at the beginning. So again, first thing we're going to do when we're talking to a veteran is we're going to request that certificate of eligibility. That way we're making sure we know what that entitlement is, amount that the borrower is going to be in, or their amount that they're going to qualify for.
Okay. And then in our area, I don't know if it varies from state to state, but in our area, what is the maximum loan amount?
So this just increased this year, and it's a great amount. So someone can buy or utilize their VA loan, purchasing a single family home, and have a maximum loan amount of $548,250. So $548,250. That's a big.
That's big. You can buy
zero down. Right.
And when we say zero down, how are they able to take a loan out with zero down payment?
So that's what the guideline calls for, is zero down. Now we still have to credit qualify them, with income, make sure the ratios are in line, credit history, et cetera. But they can purchase with zero down. Now, if you have someone with maybe less than perfect credit, and let's say they decide to put something down, that's going to help with their approval, because now they're actually putting something down when it's not even a requirement.
Okay. So what's the, let's say, minimum credit score somebody could have with their benefits?
Right. Yeah, so the VA does not have a minimum credit score.
Mhm.
However, a lot of lenders, and this really came into play last year with the COVID, with the score requirements. Like currently, right now, we're right around a 600 for the minimum credit score requirement.
Okay.
However, that's not set in stone. So if there are unique situations or extenuating circumstances for that credit situation, or they're going to put down payment, whatever that case may be, we'll look at that, and we actually have a loan committee that we can talk to and see if it makes sense. Then we can go below that.
Okay.
So,
And then, so somebody could choose to put money down if they wanted to decrease their monthly mortgage, or for whatever reason, if they chose to put a down payment down, they do have that option.
they 100% they have that option. Yep. So and that really all comes back to having that conversation with the borrower, because number one, we have to make sure that they're going to be comfortable with that payment, what the payment is. So we can structure that however they like.
Now, how about new construction loans? Can a person utilize their VA benefits for new construction?
Yes. So this is really kind of unique to Union Home. In fact, I don't think there's a lot of players in the market, at least that I'm aware of. But most new construction loans, someone wants to buy or build a home, the conventional option is really going to be their primary only option that they can do. Now, Union Home, we also have the VA construction, so they can really purchase or build a new home at zero down or a little out of pocket. So, which is awesome. It's phenomenal. So ratios are a little tighter on that, than buying an existing home. But again, it goes back to, having that conversation and educating them on what's going to put them in the best position. But yes, they can buy a new home.
So how does that look? Like, so somebody's driving down the street and they see a vacant lot. And if
Mhm.
it's not in a development where, you've got a builder that's in there kind of doing all of the packaging for them. Because I think sometimes in developments, it's a little bit easier because everything just gets rolled into that construction loan. But if somebody sees a vacant lot and they think, oh, I'd, be interested in building, how does
Mhm.
that work? They have to buy the lot and then they have to find the builder. So walk us through something like that.
Yeah, there's a couple things there. So obviously, like you said, if it's like in a development, a lot of cases it's just rolled into, together with that lot cost and the construction cost. But we can do that in the same way with if they just find a lot themselves. So as long as we just kind of roll that in, so we can do that. It's just, it comes down to the structuring of everything. So
Okay,
as
excellent.
far as builder, they can use any builder that they like, um, which we have some requirements too, because we, it can't just be, hey, my cousin, my uncle can build this house. It has to be someone that's actually, a legitimate contractor or builder.
Myth versus facts. Can you see that okay?
Yeah, it looks good.
Okay, great.
Mhm.
So I know a lot of times when I'm working with both home buyers and home sellers, there's a lot of misconception that goes on with VA loans, and often the misconception is that it's very difficult on the homeowner who's trying to sell. That it's going to be very costly for that homeowner to accept a VA loan. So I thought we could go over some of those myths surrounding the additional cost or the headaches of a VA loan. And I will admit that when I first got in the business, I've been in the business over 20 years as well. When I first got into the business, it was a lot more difficult to go through a VA loan.
Mhm.
But I would say definitely in the last 10 years, it has not been as difficult. And either conventional has either caught up or the VA has been as restrictive. I'm not really sure which one it is, but I don't really see the big barriers that used to be in place
Right.
with a VA loan. So I'm going to tackle the first one here.
Mhm.
VA loans take way too long to close. And the fact is,
VA loans close just as fast as conventional. So it's funny because, I mean, really, it really just depends on who you're partnering with. I mean, really where it starts, and having that education up front, and kind of knowing the steps, and having setting those expectations up front with the borrower, with the agents, with the all parties. But you can close them just as quick as a conventional loan, if not quicker. So, it starts with that originator and having that conversation up front, so you have everything lined up the right way.
excellent. And VA loans are riskier than conventional loans. And the fact is,
VA loans have been the safest on the market since the housing crash of 2008. Okay, so very, very true. So, again, I think the VA is loans are they're more lenient when it comes to debt to income ratio, when it comes to credit history, kind of things that some of the topics that we were just talking about. But I don't feel that it's more riskier. I think they're pretty equal.
right. And then the last myth is the VA appraisals tend to be conservative and undervalue homes. And the fact is,
all appraisals cause differences in opinion, and VA appraisals are no different. So we were talking about this earlier, Christine, and the fact of it is, it's not, if a home has an issue or a challenge, or there's something there, I mean, the appraiser is going to note it regardless of the product. It doesn't matter if it's VA, FHA, conventional. It doesn't matter if it's there. If there's an issue, it's there, and that's kind of what you want anyway.
mm-hmm.
Is if there's an issue, you want that person to protect that buyer or a consumer. So I don't feel that there's a difference in that appraisal.
No, and I'm seeing less and less of a difference too between conventional and FHA or even VA appraisals. I'm seeing less and less of a difference in their strictness or requirements at the end. So,
right.
For both my home buyers and my home owners that are selling, I mean, I've never experienced a headache when anybody is trying to utilize their VA loan. Now, some of the things that come up, though, are closing costs for a VA loan, that a home owner may be paying a closing cost for a borrower when they're using their VA loans. So typically, what can somebody expect to pay in closing cost?
On the buyer side, or you're talking about the seller side? Or both?
Yeah, like what would they have to pay? What would they have to think of that they'd have to pay closing costs for a buyer?
On the seller side, I mean, the big one is because the VA will not allow a buyer to pay a pest termite inspection,
Mm-hmm.
Which those are maybe $50, $75, somewhere in that ballpark. There's a couple other small costs that are involved, but everything is minimal on that to that seller.
Mm-hmm.
And as far as the buyer, we kind of talked about the down payment, but they do have the option to request the seller to pay up to 4% towards their closing costs. Shouldn't be that high, depending on what the loan size is, but they do have that option to roll that into the or have that into the sales price paid by the seller. The only out of pocket that they should really have would be the appraisal, which is right around $525 for a single family. And then if they're going to do a home inspection. So, but very minimal.
So what are your thoughts? What would you say to a home seller that was considering a buyer that was presenting an offer with a VA loan?
It's a great question, because that comes up a lot. And I think, again, this kind of goes back to that myth and fact. And I think a lot of times they think there's going to be more costs, or they see on the purchase agreement that maybe one buyer is putting 10% down or 20% down, and then the veteran comes in and says 0 down. It doesn't mean that that buyer is not approved or doesn't have, but they're utilizing that VA benefit. So they're just as strong, just as good as that buyer, or could be stronger than someone is putting maybe a little bit down.
Mm-hmm.
So I think I wouldn't shy away from a VA buyer that's submitted an offer to me if I'm the seller.
Excellent.
Yeah.
So, and if somebody was considering looking to purchase a home and they wanted to get pre-approved and utilize their VA benefits, how can they reach you, Harry?
Awesome. Well, they can start with Christine. You can start with you, or you have all my information, or you can give me a call at 216-310-7334. It's Harry Azzano at Union Home Mortgage.
Great. So when in your line of work with mortgages, what is the percentage of VA buyers to conventional buying?
You know what? And we were talking about this earlier too. We're generally probably about 75% government loans on my team. So we do a lot of government lending. As far as if you want to break it down to VA, we're probably about 25 to 30%.
Okay.
So we're in that neighborhood. Mm-hmm.
And how many people are on your team?
Including me, we have 13.
Okay.
So we're growing, and it's awesome.
That is awesome. Great.
Yeah. Mm-hmm.
Well, thank you so much, Harry. I really appreciate you joining me today to talk about VA loans. Hopefully we've answered at least some general questions for anybody that's thinking about purchasing a house and utilizing their VA benefits. And for anybody that's thinking about utilizing their VA benefits and would like to get some more details, you can either contact me or Harry, and you'll have all of our contact information in the comments so that you don't have to hunt through this video. Thanks again for watching, and until our next video, you have yourself a great day. Bye.
Thank you.
You're welcome. Thanks, Harry. We really appreciate you coming in.